How can you not pay 6 months worth of mortgage payments and not have your credit dinged, not have any issues? Stick around. I'll tell you all about the new bill that allows you to do just that. Great news for homeowners and renters alike. The U.S. government just passed the 2020 stimulus bill, and inside that bill is a section that may allow you to not make a mortgage payment for up to 6 months, half a year. Hey, I'm Susan Thetford with Parks Properties, native Nashvilleian and realtor here in the Nashville, Tennessee area. On this channel, you'll find all things about the Nashville community and real estate in general. If that information is important to you, then I invite you to subscribe to my channel and tap that bell so you don't miss a thing. I do a new video every single week. This process is known as forbearance, and this is for homeowners who are having temporary financial difficulty during the COVID-19 crisis. Specifically, the bill reads, during the recovery period, a borrower with a federal bank mortgage loan experiencing financial hardship may request forbearance on the federally funded mortgage loan, regardless of delinquency status. As of right now, this bill only applies to federally backed loans, but that is the majority of the loans that are out there today. If you have an FHA, VA, USDA, or Fannie Mae or Freddie Mac backed loan, this applies to you. Also, many large banks like Bank of America, Surely Wells Fargo have already named a similar program for their homeowners who are not covered underneath this bill, and it's expected that the most large banks will come out with their own program. The bill applies to anyone who owns a 1 to 4 unit home. They can claim for an initial period of forbearance of 60 days, and then they can renew it up to 4 times for 30 days each, a total of 180 days or 6 months. The bill also is applicable to homeowners who are renting out their properties as long as they purchased the property with one of those federally backed loans. And the bill also says that landlords are not allowed to evict tenants for an 120-day period, nor can the landlord change any charge penalties or late fees if they paid late. If you own rental properties and your tenants are not paying you rent, you may want to file for a forbearance on that property. Now, here's what we got to understand. Forbearance is not simply skipping your mortgage payment. It works like this. They tack on the missed payments onto the end of your payment schedule. So, in America, most common loan is a 30-year fixed rate loan. So if you claim forbearance, that means that your loan will be for 30 years plus that maximum of 6 months to completely pay off. But since the average American only lives in a home for about 12 years, if that's the case, you'll never actually end up making those final 6 payments that got tacked on to the end. The bill also specifies that your lender cannot charge you any fees, no penalties, no additional interest as a result of those missing payments from claiming the forbearance. Plus, they must claim you as current to all the credit agencies, so this will not impact your credit score or your credit history. It should not even show up anywhere on that report. The bill does not specify what happens with 2 important pieces of your monthly payment, though. See, your monthly mortgage payment is made up of 4 parts, 4 separate payments: principal, interest, taxes, and insurance. In each monthly payment, part of your monthly payment goes toward paying down the principal of your loan and interest on the outstanding loan balance, and part is going to an escrow account which pays for your property taxes and insurance. Those 2, taxes and insurance, are paid at the end of the year. Your lender will want to make sure that the state does not repossess your property for non-payment of taxes, which is why they pay those taxes for you in your escrow account. They want to make sure that it's current. So the bill does not tell us what happens with that taxes and insurance. The bill allows you to claim forbearance on your principal and your interest, but it does not specify what happens to your monthly insurance or tax payments that are going into those escrow accounts. Each state may come up with their own plan for allowing a forbearance on the property taxes, so be sure to check with your individual state's plan. If they don't have a forbearance on taxes, then another option might be that your lender may just charge you a lump sum at the end of the year for that property taxes, or you just keep paying monthly payments toward that piece of your principal and interest, taxes and insurance part that is just for escrow. There's really no way around paying that insurance. You probably have to go ahead and pay the property insurance every single month in that escrow to your lender so that they are sure to get paid. Get verification from your lender on that. Get back to them on that. So how do you actually go about claiming the forbearance and the benefits of this bill? The bill was simply states that you have to submit a request to the borrower's servicer that the borrower is experiencing a financial hardship. So it seems as though all you need to do is reach out to your mortgage lender and say that you want to claim a forbearance due to financial hardship. And according to this bill, you don't have to document financial hardship, exactly what that means. Just affirm, give them a heads up that you are experiencing a financial hardship. Hey, if you want to learn about the ways that I think Nashville's recent tornadoes, we've had a double whammy, and the significant financial impact of the tornado and the coronavirus is having on our real estate values in 2020, check out this video. And if you want to learn more about Nashville, our city, real estate in general, I invite you to subscribe to my YouTube channel and tap the bell so that you'll be notified every single time a new video is dropped. That's weekly.